All right, let's dive right into this explainer. We are completely unpacking the reality of building wealth, literally while you sleep. If you've been searching for a way to finally untether your earning potential from that daily 9-to-5 grind, well, you're in exactly the right place.
56%. Let that sink in for a second. A recent Advance America survey revealed that 56% of Americans need to earn more just to feel financially secure. So we're talking about more than half the country feeling the pinch right now, which makes alternative income streams absolutely vital. You know, it's really not about luxury anymore. For a lot of us, it's just about creating some essential breathing room.
To help get us there, our agenda today is super straightforward. First, what is passive income? Second, strategy 1, invest money. Third, strategy 2, rent assets. Fourth, strategy 3, leverage skills. And fifth, we'll cover red flags and scams.
Okay, let's jump right into section 1. What is passive income? The reality check.
So let's start by addressing the elephant in the room, the fantasy versus the actual reality of making money. With active income, you're continuously trading your time for money. Passive income, on the other hand, isn't just zero effort. Actually, it's heavily front-loaded effort. You do the bulk of the hard work up front for a delayed, continuous payout that eventually, fingers crossed, lets you step back.
Formally speaking, the IRS actually defines this quite specifically. They classify passive activities broadly as trade or business activities where you just don't materially participate on a day-to-day basis, or simply put, rental activities. So the government already has a designated official bucket for this exact kind of wealth generation.
Now, to make all of this really actionable, Advance America developed what they call a resource framework. And this is a real game changer because it completely reframes how we should approach passive income. It forces you to stop and ask, do you have more money, time, skills, or assets to invest up front? Because your starting point depends entirely on which of these 4 buckets you can actually tap into today.
And that brings us to section 2. Strategy 1, invest money, making your capital work for you.
So if you happen to have some capital right now, you can absolutely lean into our first strategy, investing money. This covers a whole spectrum, ranging from government-backed treasury bills and high-yield savings right up to dividend-paying stocks and broad index funds that track the entire market. There are also higher-yield real estate investment trusts, you'll hear those called REITs, and automated robo-advisors. Now, these do require cash up front, obviously, but the beauty is they need minimal daily maintenance from you.
But, and this is a big but, this approach really requires a solid understanding of risk. While you definitely get high growth potential and the absolute magic of compound interest over time, you've got to acknowledge the realities here. You'll likely have limited access to those funds in the short term, you're going to be subject to some complex tax burdens, and of course, you always face market volatility. It's really a calculated trade-off.
Moving right along to section 3, strategy 2, rent assets, monetizing what you already own.
Now, if you don't have thousands of dollars just sitting around to invest, but you do have physical items gathering dust, strategy 2 is definitely for you. Honestly, this list might surprise you. People are literally making money renting out their driveways, premium spaces like wine cellars, and everything from power tools and leaf blowers to, yes, even baby strollers, or even leasing empty land for solar and wind farms. You're basically turning your idle assets into cash-generating machines.
But hey, remember that reality check we talked about earlier? Renting assets isn't pure magic. The dream is getting instant daily cash from idle items. The reality, though, is that you are still totally responsible for ongoing property upkeep, cleaning things between rentals, handling maintenance, and navigating insurance. You've got to track your inventory closely so things don't get damaged or lost. So it's not entirely hands-off.
Okay, let's look at section 4, strategy 3, leverage skills, creating digital equity.
All right, let's dive into this third path, which is honestly perfect for anyone with zero initial funds but plenty of time and creativity. By leveraging your specific skills, you can create digital products. Think Notion templates, self-published ebooks, or really comprehensive online courses. The best part? You build these things once, but you can sell them to a global audience infinitely. There are literally no shipping or inventory constraints to worry about here.
Another massive avenue in this category is affiliate marketing. This is where you build a content channel, like maybe a blog or a YouTube channel, over time, and you earn commissions through highly targeted product recommendations. Now sure, it takes consistent effort up front to build that audience trust, but the payouts become incredibly passive once your content is actually established.
When we look at some fascinating data from SaleWho on passive income models, a really clear trade-off emerges. Creating digital assets like mobile apps or those online courses we mentioned requires a massive amount of initial effort. But the payoff? Well, the long-term scalability is virtually limitless. You're essentially trading high upfront time for a massive, infinite global reach.
Which brings us to Section 5, Red Flags and Scams, Protecting Your Passive Income.
Now hold on, before you rush off to start a digital empire, we really need to cover the dark side of the passive income world. Scammers absolutely know that people are desperate for financial freedom, so you should immediately walk away from anything promising guaranteed returns because, listen, all investments carry some risk or anything demanding massive upfront fees. You've really got to watch out for high-pressure sales tactics, those get-rich-quick pyramid schemes, and fake drop-shipping suppliers.
Furthermore, as the financial experts over at Wise point out, even the completely legitimate streams have some hidden pitfalls. If your digital products are reaching a global audience, things like hidden cross-border payment fees, international currency conversion costs, and some pretty complex cross-border taxes can quietly eat away at your profits. It's a real buzzkill, but you have to account for high platform commission rates before you even start.
Finally, let's wrap this all up with your action plan, starting your journey today.
So how do we safely bring all these completely different ideas together into a concrete plan? Well, following these 4 structured steps ensures you don't overextend yourself. First, assess your resources objectively. Second, research your chosen path. Third, start small. Think low-risk investments or low-cost digital products. And fourth, monitor your performance. Doing this allows you to learn the ropes of your chosen income stream with very minimal risk.
If there is literally one thing you take away from this entire explainer, it should be this quote right here. Passive income is not a get-rich-quick scheme, but a long-term strategy. You are basically planting seeds today for the shade you're going to sit in tomorrow.
That 56% of us looking for financial security? We have real, actionable options. So take a hard look at what you have today. Pick your framework and ask yourself, which resource, your money, your assets, your time, or your skills, will you leverage first to build your financial freedom? Thanks for joining me for this explainer, and hey, here's to building your foundation.